Okay, what is up, everybody? Welcome to the Russel Journal. Russell, and this is my journal entry for Tuesday, October 11th, 2022. As you can see behind me, it is an interesting day in the markets. These are our spider sectors. We kind of keep an eye on them every day. You can see just bunches of red up in here. You can see we had this sort of arc thing happen all day long throughout all of the trading day. What we had happen today is very, very concerning. What the Bank of England just said, we're going to sort of get into it as far as the current events that are going on. As of right now, everything was doing well. Everything was kind of getting priced into the market, but we have had a few snafus. We've had some snags happen along the way. One of them has to do with British pension funds. Okay. These British pension funds have these bonds, and as interest rates go up, the principal of bonds go down. Okay. Now, where you wind up so if you buy a bond and it's 1% interest today, tomorrow they sell a bond that's 2% interest, the immediate principal value of your bond goes down. Okay. So the thing with these bonds here is that interest rates have been continuing to climb. Pension funds own bonds that were bought at lower interest rates, so the immediate equity value of those bonds continues to decline. Okay, where this comes into any sort of risk is now with bonds. The only thing that can really affect it is there's two things that can really screw up a bond. Either A, whoever you purchased the bond from is never able to repay that bond back, right? Those bonds become insolvent. The other place where it comes is if for some reason you have to sell bonds today based on current interest rates, what's the equity value? Okay. Now, most of these pension funds never have any intention of selling, but as far as like brokerages are concerned, they still have to manage the equity value on a day-to-day basis for those bonds. And so what was happening is interest rates were going up so much that equities were the equity in the bond, right? Your principal that you pay for the bond, which the pension fund will get paid back. But as of right now, because it's gone down so much in immediate equity, a lot of these brokerages are like really struggling to manage the bond portfolios that these pension funds are holding. Now, again, it's not normally a big deal. It's not normally stupid, but we are in very extraordinary times where nobody knows. And so risk management is really, really eyeing this stuff. Now, in my personal opinion, it's all very stupid, but we'll get into that in a second. So basically what happened is these pension funds were basically in trouble because they were getting a margin call to make up for the equity in these bonds, which typically means that they have purchased bonds on margin. Okay. And that's pretty bad. If pensions are borrowing money to buy bonds, this is really, really a bad thing. I don't know what pension fund should be allowed to do this, but apparently they do it. Okay. So what happened then is that the Bank of England came in and said, listen, we will buy these bonds to save the pension funds from collapsing. Okay. Again, this is okay. So what happened? This happened about a couple weeks ago. Okay. What everybody thought this was a Bank of England pivot. It was not. And you can go back a few days ago. I posted on a show. You go back and watch some of my old shows, and you will see I said, this is not a Bank of England pivot. This is just a bailout for some pension funds. It is not a pivot. Okay. None of central banks have any intention of pivoting until inflation is under control. Okay. Now, they may pause for a little bit, right? They might do something like that or pull back on how hard they're hitting, but they aren't stopping. This is what they want to see. They want to see pain. And the other thing that they want to see is they want to see inflation go up. They want to see it. It has to go up. Okay, listen. If inflation is at 9% here, right? That's headline inflation. And they start raising interest rates, inflation has to still go up because we didn't bring it down and then bring up interest rates. It's still up here. It has to go up. The idea is to make it so you don't have any money. If you don't have any money, you can't spend anything. And once we get to the end of your wallet, then people come down till they find somebody who's got a little bit of money in their wallet to pay those prices. Okay. So the thing is like this whole bull case scenario that they've had all about, well, they'll raise rates and inflation will immediately come down. It can't work that way. Like, that's not how math work, you know? So the thing is like, now you got they thought, oh, the Bank of England is going to pivot. That's just going to happen. They're pivoting their pension fund bonds. They're keeping people from starving to death. That's not pivoting, right? So now you've got this really troubled situation. And it's gotten to the point where the Bank of England basically had to come out and say, yeah, this much time to get your portfolios figured out, and we're done. This is not a pivot, right? Okay, so I'll bring up I'll bring up one of the articles. We can look at it. The Bank of England, the BOE, Bailey says UK pension funds managers have 3 days to rebalance their reports. Okay, these guys they only have so much time to rebalance this stuff. Okay, because they're not buying the bonds after so much time. This was not a pivot. This was a lifeline. That's all it was. They're not backing off. Okay. In the meantime, you have headwinds, really nasty headwinds. Like the government, the Parliament of England is literally trying to cap prices on energy. This is not deflationary, just so you know. Anyway, the way I've done some talking to some people, the way you cap, you manage inflation in energy is you actually cap energy usage. You don't cap energy prices. So, okay, so you got that. Now, all of this happens on the same day that the IMF has now made another warning about a global recession. And even so, there's a point where the IMF has petitioned the central banks to slow down their tightening. The banks got to keep their credibility. So they're not going to sacrifice their credibility for whatever's going on in other parts of the world. It's just that's not what they're going to do. Okay. Now, I personally, again, am of the opinion you've only got probably 1 to 2 more hikes. As far as that goes, the pricing of money goes, that doesn't have to be that big a deal. The problem is that people right now are acting as if it's this, like it really comes down to this. None of us understood how this whole machine worked. Okay, we didn't understand it. Okay, so now what's happening is because of that, you have a bunch of people who have like pieces of the puzzle, or right, see the whole economic creature. Okay, this whole thing could have been just like a really beautiful deleveraging. It could have been fine. Things come down. Guess what? If you own some stocks, probably take some profit time, do some stuff like that. Wait for prices to come down, get some like nice inventory of things. If you're poor and needed a shot to buy a house, your chance will come with the correction in the housing market. It could have been gorgeous. Like it could set us up. But right now they are, and this is where like we're going to talk about Jamie Dimon, because Jamie Dimon's come out and said there's like another 20% correction in the stock market. Again, if you go back to yesterday's show, go back and watch. I show you the 200 EMA. We go over the chart. I show you every time we get to the 200 EMA or the 200 SMA on the week, that is the bottom. That there's one time it didn't do that. It went below there, and it only stayed down there like 2 friggin' weeks. So like the thing is like normally this is the bottom. Normally you're here, okay? So what does it mean now? It right now it means a few things. We'll jump, you know what? We'll just jump into the charts and I will show you, okay? So coming in here, again, we go through our normal process. Trend is up. Obviously, if you're up here, your bias is going to be up, but I will turn the MA on so you can see it. Trend is up. This marks our trend of the lows, lower lows, starting to break for higher highs. The real question is what happens up here at the upper Bollinger Band? Okay, we're going to turn the Bollinger Bands back on. Now, I'm going to tell you, the way the market behaves is the way it behaves. The rules for how you trade are the same no matter what condition. They do not break these rules, okay? Here's the deal. When you're trading this, if you are long bias and you get to the upper Bollinger Band, you take profit, okay? That is what you do. Now, what you can see here, okay? And I'll wheel in on that candle so you can see the candle. You can see two things happen here. You get up here, that wick right there gets dang near to that upper Bollinger Band, and all of a sudden you find selling pressure, okay? Here's the deal with that. Look, they took profit. Okay, you got to bounce up this morning, right? And then a pullback, right? But you still got selling pressure coming from the upper Bollinger Band. This wick, this little thing right here, that shows you selling pressure. Okay? That thing has got selling pressure on it. They are taking profit. Okay? Now, what trumps this? This is where they back out. And you can see over here where they got outside of it and they came back in, caused this whole big pullback, right? In the VIX. All right. Here's this. This is the slow stochastic. This measures momentum. Okay. If you here and this line is not over this line, right? If this line is not over this line for 3 candle bodies, it is not embedded. Okay. That lack of embedding right there, that lack of embedding means it's a no-go zone for the next 3 days. Until that sucker embeds up here into the upper embeds in here against that upper Bollinger Band, you can't trade it. Now it could keep going if fear takes over, but trading is gone now from this. Okay. Like the traders, they will be hands off for the next, while this comes up for the next 3 days. This will be embedded. All right. DXY coming down, broke above. They will stay bullish on this until it gets to here. And if this slow stochastic, if this line gets over here, right? Makes sense. Look, here's the bottom of the candle. See how long that wick is? That's buying pressure. They let the price come down to here and then they pushed it back up. Okay. That's your buying pressure. Trend is up. Bias is up. Momentum is up. You're ways away from the upper Bollinger Band. You're targeting the 114.82 on that upper band. Okay. That is where the pros will be looking to take profit, is right up in here. Trend up, bias up, momentum up. Okay. So you're pretty safe to buy this right here for, okay. Now, and once it gets up here, you can take that profit. And then we go into SPY, and we're going to talk about SPY a little bit. Okay. Trend down, bias down, momentum down. Okay, right? We're short. Everything is pointing towards the short side of this market, right? I made money both ways today, but that's okay. We're going back to the monthly. Oh, we're gonna do a couple. There's the other thing, a little house thing. I'm gonna change this from the 18 MA to the 21 EMA. SPY respects that 21 EMA a lot more than it does the simple moving average. Now, what they tried to do today, they did try to break this out. When that news from the Bank of England, when they dropped that report hit, it pretty much tanked this bad baby. And I'll show you, we can even go look on the 4 hour. You can see the first 4 hours of trading, like it was up. It was getting ready and it was going to run hard. And we got in here and the price action got weird for me. And I thought, I better hedge my long position with a short. And sure enough, but we'll go back one more time and look at one more thing, and then we're going to call it a day. Go to the weekly moving average. And this is concerning, okay? You still got some time on it, but see this? This is the 200 EMA. Normally, and like I said, go back and watch yesterday's show. Normally you get here, and this is the bottom. If this candle closes this week below this, or we have daily candles close below this line runs the risk of becoming resistance. Okay. You get below this line and it will be very hard to get above it. And on top of that, if you're looking at your slow stochastic, you got 2 weeks underneath here. And this is something I warned about on Sunday. And I think I warned about it in yesterday's show. Or I warned on last Friday. If the bulls do not step up this week and send this in the upward direction, this thing is going to embed. See this line? You've got 2 candles below. You close this week down, and they will have their embedded reading. Okay? They will have the bears will have everything they need to run this chart down. Okay? So the bulls need to step up. They don't have what they need, though. Now, we have CPI report coming out on Thursday, which I suspect will take this down. Where the bulls can win this is actually on Friday, okay? On Friday, we are getting the retail sales numbers, okay? If the retail sales numbers show either less volume of purchases or a reduction in purchases, right? If those retail sales have come down month over month, it will show that inflation is at the edge of breaking. Now, this is good for their whole Fed pivot thing. Fed pivoting is not good for the economy, okay? Remember, the thing is the Fed has to pivot after a whole bunch of people lose their jobs and after a whole bunch of companies miss or report really bad future guidance on earnings. The Fed will not pivot into a healthy market. Now, that will probably be around a good time for the market to bottom, because as they have those bad earnings, the Fed pivoting could allow for the next cycle of growth. But as of right now, if the Fed came out tomorrow and said, well, we're going to pivot, it would not be good. They're going to be pivoting into already employees getting laid off. All right. So that is really a big, massive concern for us and for the stock market. Okay. Now, that all being said, I'd like to thank you guys all for checking out the show. Thank you for joining me today. The Russel Journal is written, edited, and hosted by me, Russel Liss. I work in conjunction with Social Media Shows. Our executive producer is Maria Pereza. Give Social Media Shows a check out. They have a studio in Vegas if you're interested in trying to get some sort of sponsorship, or not sponsorship. If you're trying to get some sort of show like this going, she has helped me with this one. She can help you with yours, and very good pricing as far as like some sort of startup cost as so that stuff goes. On your way out, if you would, please make sure to hit the like button. Please sure to subscribe, and we will see you tomorrow. And until then, though, pretend I said some sort of catchphrase.